Right now, sitting in a filing cabinet somewhere in your house, there could be a document worth $3,000, and most Canadian seniors have never even heard of it. It's not a grant. It's not a loan you have to pay back. It's a tax credit the CRA has quietly offered since 2016, and every year millions of dollars go unclaimed simply because nobody told the people who qualify that it exists. If you're 65 or older, or you're caring for someone who is, and you've so much as installed a grab bar, widened a doorway, or built a ramp in the last 12 months, stay with me. Because by the end of this video, you're going to know exactly how to put up to $3,000 back in your pocket, what mistakes disqualify people every single year, and the one form that makes or breaks your claim. Let's get into it. Here's the situation. More seniors than ever are choosing to age in place, staying in the home they raised their family in, rather than moving into assisted living. It's usually cheaper, it's more comfortable, and frankly, most people just want to stay where their memories are. But aging in place isn't free. A walk-in shower, a stair lift, wider hallways for a walker or wheelchair. These projects can run into the tens of thousands of dollars, and that's exactly the gap this credit was built to close. It's called the Home Accessibility Tax Credit, or HATC, and the federal government created it specifically so that the financial burden of making a home safer doesn't fall entirely on people living on a fixed income. The problem? Awareness. Study after study on unclaimed government benefits points to the same pattern. The programs that require you to actively know about them and fill out a specific form are the ones that go underused. This is one of those programs, so let's fix that right now. There are two ways into this credit, and you only need to meet one of them. The first is age. If you are 65 years of age or older by the end of the tax year, you qualify as what the CRA calls a qualifying individual. That's it. No income test, no asset test, just your age. The second is disability. If you're eligible for the disability tax credit at any point during the year, regardless of your age, you also qualify. Now here's a detail that trips a lot of people up, and it's actually good news. You don't have to be the one who pays for the renovation to benefit from this credit. If you're a spouse, common law partner, or a family member supporting a qualifying senior, say a parent living with you, or a parent for whom you claim the caregiver amount, you may be able to claim these expenses yourself, even if the home isn't technically in your name. The CRA calls this an eligible individual claim, and it opens the door for adult children who are footing the bill for a parent's renovation. One more requirement that's easy to miss: the home has to be the qualifying individual's principal residence at some point during the year. A rental property, a cottage, or a home nobody actually lives in doesn't count. Let's get specific, because up to $3,000 means nothing without the math behind it. The credit is worth 15% of your eligible renovation expenses, up to a maximum of $20,000 in expenses per year per eligible dwelling. Do that math and the ceiling comes out to exactly $3,000 in tax credit. So if you spent $10,000 on a walk-in tub and railing installation, you'd be looking at a $1,500 credit. Spend the full $20,000 and you hit the maximum $3,000. Now here's the part that separates the people who benefit from this credit and the people who get a nasty surprise at tax time. This is a non-refundable credit. That means it reduces the tax you owe. It doesn't create a check the CRA mails you if you owe nothing. If your total tax payable for the year is less than the credit, you don't get the difference as a refund. This is exactly why family claims matter so much. If a senior on a modest pension doesn't owe enough tax to use the full credit, but their adult child, who does have significant tax owing, helped pay for the renovation, that adult child claiming the expense could mean the difference between using the credit fully and losing part of it. And one important note, the CRA doesn't reduce your eligible expenses, because you also received a provincial grant or rebate for the same renovation. Government assistance from other programs generally doesn't cancel out your claim here, so if you're already getting help from a provincial accessibility program, you may still be able to stack this federal credit on top. This is where most claims get denied, not because people are trying to cheat the system, but because they genuinely don't know where the line is. The CRA's test is simple to say and harder to apply. The renovation has to either allow the qualifying individual to gain access to the home, be mobile within it, or function more independently inside it, or it has to reduce the risk of harm within the home. In practice, that means expenses like wheelchair ramps and exterior lifts, walk-in bathtubs and curbless walk-in showers, grab bars and reinforced railings, both indoor and outdoor, widening doorways or hallways for wheelchair or walker, access non-slip flooring installed specifically to reduce fall risk, lowering countertops or cabinets for wheelchair accessibility, lever-style door and faucet handles that don't require gripping strength, motion sensor or improved lighting installed to reduce fall risk. Now, what gets rejected? This is just as important. The renovation has to be of an enduring nature, meaning it's a permanent fixture, not something portable. A shower chair you can pick up and move? Not eligible. A wall-mounted, permanently installed grab bar? Eligible. Routine repairs, general maintenance, or renovations done purely for appearance or to increase property value, with no accessibility or safety purpose, don't qualify either. And you can't claim the value of your own labor if you're doing the work yourself, though the cost of materials and supplies generally does count. If you're ever unsure whether something qualifies, the CRA's own guidance is the final word, and we'd always recommend checking the current list directly through the CRA website or speaking with a tax professional before you start major work, not after. Here's the step-by-step, because this is where good intentions turn into a rejected claim if you skip a step. Step 1. Keep every receipt and invoice, not just the total. The CRA wants documentation that clearly shows the contractor's name and business address, their GST or HST number if applicable, a description of the work performed, the address where it was done, and the dates the work was completed. If you did it yourself, keep receipts for supplies and materials. Step 2. You don't mail these documents in with your return. You keep them. But you need to be ready to produce them if the CRA asks, and they do request supporting documents for this credit fairly often, so don't file them away and forget where they are. Step 3. Complete the calculation using Schedule 12, Home Accessibility Expenses. This form walks you through totaling your eligible expenses and determining your credit amount. Step 4. Transfer that final number onto line 31285 of your federal tax return. That's it. No separate application. No waiting for approval before you start renovating. You do the work, you keep the paperwork, and you claim it when you file. One last thing worth knowing. If a home has more than one qualifying individual living in it, the $20,000 expense limit is shared between them. It doesn't multiply per person. And if more than one person is eligible to claim the same expenses, the total claim between everyone still can't exceed that combined limit. Picture a woman in her mid-70s living alone in the home she's owned for 40 years. After a fall on the stairs to her basement laundry room, her son decides it's time to make some changes. They install a stair lift, add grab bars in the bathroom, and replace the old bathtub with a curbless walk-in shower. Total cost, just under $18,000. Because the son helped pay and has tax owing for the year, he claims the expense as an eligible individual supporting his mother. 15% of that renovation comes back to him as a credit, nearly $2,700, money that would have simply been paid in tax otherwise. That's not a hypothetical government promise. That's how this credit is designed to work, right now, for families in exactly this situation. If there's one thing to take away from this entire video, it's this. Don't wait until tax season to figure out if your renovation qualifies. The single biggest reason claims get reduced or denied isn't fraud, it's poor documentation collected after the fact, or renovations that turn out to blend accessibility work with unrelated cosmetic upgrades with no way to separate the costs. Before a single contractor picks up a tool, get a detailed itemized quote, confirm with the contractor that the invoice will clearly separate accessibility-related work from anything cosmetic. That 5-minute conversation at the start of a project can be the difference between claiming the full amount and losing hundreds or thousands of dollars later. Here's the truth about government benefits like this one. They were never designed to find you. They were designed to be found. And every year, seniors and families who could genuinely use that $3,000 leave it sitting on the table simply because nobody handed them the roadmap. You just got the roadmap. So if you're planning any kind of accessibility renovation this year, or if you already finished one and you're not sure it counts, don't guess, pull out those receipts tonight. Check them against what you just heard. And if you know a parent, a grandparent, or a neighbor who's living with a fall risk they haven't addressed because of the cost, send them this video. That's not just information, that could be $3,000 real dollars, and possibly a fall or a hospital visit prevented. If this helped you, subscribe and turn on notifications because the rules around senior benefits in this country change more often than most people realize, and we cover every update the moment it happens. Take care of yourselves and take care of the people who raised you.